Experts and models now pointing to the possibility of cases peaking at 40,000 even by mid-month. This possibly surging past highs that we saw back during the Delta surge. How worrisome is this for an economy that's still on the mend?
Sure. Certainly, the sentiment in the Philippines has dampened in the past week after the authorities moved to tighten COVID-19 restrictions. We think that there's if there's a broader lockdown being enacted at some point in time, there's risk of economic growth expectation being trimmed down. Last month, when we published our 2022 outlook, we also highlighted that virus resurgences and emerging variants will remain as tail risk in 2022. But we also believe that so long as hospitalization rate as well as ICU utilization rate is well under control, currently, even though it's too early to call, but based on what we know currently, we do not expect another nationwide lockdown in our baseline scenario. Having said that, with the current uncertainties and tighter curbs, it is still a setback for the Philippine economy, at least in the near term. What we worry is that it could dampen the recovery momentum that is already underway since Q4 last year. And if broader lockdown were to be enacted, we are looking at risk of the economic growth expectations being trimmed down. Over in the banking sector, we think the Omicron variant could impact banks in two main ways should there be another broader lockdown. First of all, is on credit growth. As some of us are aware of, loan growth has finally picked up the pace in Q4 last year after many months of contraction, as banks were risk-averse in extending credits to the SME and retail borrowers over March of 2020 and part of 2021. And while large corporates in the Philippines have been facing excess capacity, so corporate loan demand has been fairly muted over the same period. And so should there be a broader lockdown triggered by the Omicron virus strain, we think that loan growth expectation at banks this year could be trimmed down, and that will have an impact on the bank's net interest income, and in turn affect their profitability. Currently, we are pricing in an expectation of mid to high single-digit loan growth for this year. The second impact is actually on the asset risk, especially from retail and SME loans. Now, a gentle reminder that the retail and SME loans of the Philippine banks were hit pretty badly over the last series of lockdowns. We saw NPLs in the system at the system level tripled, and retail and SME borrowers were actually the main contributor to this increase. So retail and SME segment is definitely an area to watch out for, to monitor in case another lockdown is enacted. But like I mentioned earlier, this is currently our baseline expectation.
You mentioned the loan growth story here. Can you give us a bit more of understanding of what the catalyst could be for that growth to get back to, as you mentioned, above the single digit levels here? We've had already quite accommodative BSP policy. We've kept the interest rates low. And you mentioned that the retail sector, the consumer sector are still not tapping into these loans. So what's it going to take for that to happen, for a recovery to be spurred?
Well, I think so far, like over the past year and a half, the risk aversion is actually on the bank's part. Like you mentioned, the BSP has been fairly accommodative. I think generally the banks are risk averse in extending credit to the retail and SME borrowers, and that is reflection. That is also a reflection of how some of these banks has been badly hit through the last cycle. We are seeing, like the NPL ratio rising up to double digits level at some of the smaller banks, and so it's not unexpected that banks are risk averse to extend credit to this group of borrowers. On the corporate side, I think what we need to see is so far we are seeing recovery in business confidence, but what we need to see is that that recovery in business confidence being persistent and being resilient to the current volatility, and so that will have confidence in the business to expand their budget this year, and so then hopefully that will revive corporate loan demand.
Given all these possibilities, Yustina, with the looming threat, of course, of the Omicron variant vis-a-vis, of course, vaccination pace in the country slowly picking up? When do you see at least the Philippine economy returning to pre-pandemic levels?
Well, the initial expectation is, like for 2022 is that this will be a year of recovery. Certainly, especially, like since for the past year or so, the Philippine economy has been battling with, like alternating between tightening and easing lockdown. So with higher vaccination rates now, certainly the expectation is for 2022 to be a year of recovery. But like I mentioned earlier, like given the current uncertainties, there are still unknowns that things that we do not know about the Omicron variant. So far, what we have learned is that the cases could be less severe as compared to the Delta variant. But, like it remains to be seen whether the economic activities could be sustained. That's one. But also, depending on whether there's another broader lockdown or not, there will be a major moving part going forward in determining whether the current momentum will dampen the recovery, the economic recovery momentum enough.
Okay, given that as well, how well positioned is the Philippine economy to absorb another an Omicron-driven surge compared to the rest of Southeast Asia?
Well, the initial expectation is that, like some of us, at least within the analyst community, we did see Philippines as one of the laggards as compared to its peers in the Southeast Asia as far as the economic recovery momentum goes. But at least based on the leading economic indicator that we have seen in Q4, those have rebounded very strongly. If we look at purchasing, like manufacturing PMI indicator, that has been flashing green for the last couple of months. And so definitely, like Q4 was a strong year for the Philippines economy, and that has actually surprised to the upside. What is in store for the Philippine economy in 2022, like I said earlier, will very much depend on, like whether another broader lockdown will be enacted. So far, we are seeing the authorities tightening mobility curbs, but not a complete lockdown. So there will be a big moving part going forward.